Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is the day of Forex. A quick look and take a look at the dollar versus Canada. Today's date is October 31st, 2024. Let's get started. Looking at the hourly chart, we've been talking about the dollar Canada moving to the upside all through the month of, well, going back to September. The price has been higher. Just a few little corrective moves in the process. Obviously, this move over the last few weeks of trading has been at a slower pace than this move, or a less steep run to the upside. That is indicative of maybe some resistance ahead that the market is not comfortable with. And if we go to the 4-hour chart of this currency pair and take a look at the high price for the year, that high price came back here in the month of August, and it was at 1.39458 yesterday. The high price got within about 7 pips of that high and rotated back to the downside in up and down trading, as you can see right through here. Off the 4-hour chart, doesn't look all that bad. Off the 1-hour chart, we get a different view, and that view has the price breaking below the 100-hour moving average. That's the first break below the 100-hour moving average since this time last week, where the price fell below the 100-hour moving average, but found support buyers against this swing level right through here, and was able to hold support against that level, rotate back above the 100-hour moving average, and then use the 100-hour moving average as support right through here. So what has changed? Well, technically, the break below the 100-hour moving average is more bearish. It's a win for the sellers, and that's what you try to look for in these turning points, is a win for the opposite of the trend type traders. So getting below the 139 level is a win for the sellers. If the price can stay below that level, then the sellers can push further with maybe the 200-hour moving average coming to 1.3866. Now, and the last time the price, by the way, traded below the 200-hour moving average was way back here, when both the 100 and 200-hour moving average were basically near each other right before the trend moved to the upside. And so that was a nice little key tell right there that we're due for something to happen. And indeed, it did happen with this sharp trend move to the upside. So what about fundamentally? I've been talking about and Adam's been talking about the weakness in the Canadian economy. Well, what are we're seeing? We're seeing stocks get hammered in trading here today as earnings come out, and market traders react to little nuances in the earnings. We're also seeing yields move higher, continue to move higher, with the 10-year up 0.5 or 5 basis points currently at the moment. So does a combination of stocks moving lower, yields moving higher, hurt the U.S. economy, cause the market, the economy to slow, causing the dollar to move lower? That may be the catalyst for it. So the focus returns to the U.S. dollar, returns to things like the stock market, higher yields. And of course, we do have that election coming up on Tuesday, where it's such a wild card. Who knows what's going to happen at that point? And the Federal Reserve coming following that on Thursday. So lots of balls in the air. But what we know from a technical perspective is that the dollar Canada is breaking below the 100-hour moving average, giving a victory for the sellers for a change, but work to do on the downside. That's my technical look at the dollar versus Canada. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.